Hello everybody. This video we are doing for those private investors and business angels who want to understand the secrets of investing in startups told by professional VCs in Silicon Valley. So let me introduce Marisa McGinnis, who is a managing director in Business Angels Group Golden Seeds and also a limited partner in Blumberg venture fund. Marisa, can you tell us a little bit about yourself, your angel group, and VC fund?
Yes. I started investing, saving money to invest when I was 5 years old, and I made my first investment when I was 11. Of course, I had my mother buy the stock for me, and now I'm a multi-millionaire. I am an angel investor, and I'm also a limited partner in Blumberg Capital Management Fund. The angel group I belong to is Golden Seeds. We have 300 members, and we have 6 chapters. We invest only in the United States, and we only invest in women-founded startups. Blumberg invests all over the world, and they do seed and Series A. They have an office in Tel Aviv because I wanted a lot of Israeli companies. They also have offices in New York, and their headquarters is in San Francisco. So I invest in seed and A round, and then sometimes some of the further rounds.
Okay, thank you, Marisa. And so my first question is, what are the 3 most promising or successful startups in which you are invested, or your angel group or your fund, and tell a little bit about them, please.
Okay, well, everyone's always interested in exits. So I have one that was through Blumberg, and they do a lot of cyber defense because a lot of the companies come from the Israeli intelligence unit, the 8200 unit. So they're the best in the world. So the cyber defense startup I was in was called Cyvera, and it was acquired after it had been founded 18 months before, and it was acquired by Palo Alto Networks, which is also an Israeli company. It's publicly traded, and it's in Palo Alto. The ones I'm really excited about are one called WunderCar, and it's based in Berlin, Germany, and it's a carpooling service. They don't mainly in Asia. And then another one is called Trulioo, which is in Canada, and that is the world's largest global identity identification service. And then to look more recently, I just invested, actually today, in a company called Terra Circuits, which is located in Mountain View. And this is through Golden Seeds. And they do micro LEDs. And in my previous investment is a company called Tempo Automation, which is located in San Francisco. And I invested in that one. It was the C round, although I introduced the company to Golden Seeds. And they do printed circuit boards, short runs, custom printed circuit boards. And then also there is a secondary market. A lot of people aren't aware of this. So if the founders need liquidity, you can sell your shares before you go public on the secondary market. So I purchased also this year some Airbnb stock on the secondary market.
Okay. And so how has the valuation changed since you or your fund or your business angel group had invested in those startups? Or if has the exit happened, what was the multipliers?
Okay, the exits are unlike what everyone reads and believes, they usually take 8 to 12 years. They don't happen in a year. So, I wish.
Okay.
The valuations are there's a lot of money in Silicon Valley because a lot of people have had exits. And what these people do, these founders, they invest in other startups rather than putting their money in the bank. So we're awash with money. So in Silicon Valley, the valuations have gone up a lot, and it's fairly easy to get funding for A rounds, and then the funding dries up. It's called the missing middle, and it dries up for the next funding round. The exits are, a lot of the companies aren't going to make it. And then the exits can be anywhere from, the angel group is looking for 3x to 10x. And then the return on a venture fund tends to be something like 1.3x. And the venture funds are 10 years and they'll have a 2-year extension.
Okay. What is your best case? For example, the valuation has changed since you had invested in some startup and now it's multiplies 10 or...
Okay, well, for Cyvera, I think the multiplier was, I think it was 22.
22.
Yeah,
okay.
But that's not typical.
If you are talking about one of these cases you invested personally, can you tell us how long have you know the CEO of the company before you had invested? Was it you just met and you invested, or it took some time for you?
Well, okay, the last one, the one I just invested in today. So they came in through, we have a vigorous screening because right now you have thousands of startups. And so only a few of them will be funded, probably 3% of the ones that go either to the angel group or to the VC fund. So it's very low, and they're pre-screened already. So the one yesterday, I saw them probably this year, maybe 4 months ago. And then we have a very vigorous due diligence team. And so yesterday I went down to see the laboratory that they have, and I met the founder for the first time because everything had been done with video conferencing because they're traveling all over the world. So,
And okay, 4 months. And was it really faster than usual or slowly than usual?
It was fast because because everything they had done their homework. The IP checked out. We had about 6 people on our due diligence team, and our due diligence team had a deep background in the micro LEDs will be used for displays like Apple Watches, TV screens, and so our due diligence team had an extensive background in that. So it didn't take them very long to go through that. And then we had someone check all the patents, and they had a full, pretty big, well-documented patent portfolio. And then we had somebody else call all the references and the customers.
Okay, was it seed round or round A? What was it?
They had some prior investment, but we consider it a seed round.
Seed.
Yeah,
okay.
And it's oversubscribed.
And your angel group was leading the round, or?
Yeah, we're leading this round. Yes.
Is it typical for your business, angel group?
Our group likes to lead.
Okay.
Yeah, because or else we get squeezed out on the terms. And then we have in our documents, we have pro rata rights. So for the future fundraising, we get to keep our percentage, in the company if we want to do further investments.
Marisa, I know that every fund, every angel group has really a lot of criteria when they analyze a startup. What are the 3 most important to you?
All right, it's really the same for everybody. We're looking at, can the team, can they execute, and then can it scale? So in other words, is the market big enough? And then also, is it something new? Because we see a lot of Me Too.
Some innovation.
Yeah, people saying, I am the Uber of whatever. And so there's usually going to be number one, and then the market gets pretty splintered after that. What I look at is mainly I want to know if I think they can execute. And a lot of that is just intuitive. I look at them and I see, based on extensive interviews I've done with founders of companies. Like I interviewed, when I was starting to do my startups, I interviewed 144 founders in person. And then I would do a blog post about them. And some of the founders had just started, and some were billionaires. So I was looking for the characteristics, obviously, of the billionaires, and that they had in common. And so that's what I look for, and that's very subjective. And then also there's certain areas that I won't invest in. So if you have a company in that area, I'm just not interested. And that's true with most of the VCs and the angel groups. So you need to look and see what area your company is in, and don't just send out a bunch of business plans. See if they're in that market, or else they're not going to be interested.
Marisa, looking back, what are the mistakes you would recommend investors who just started to invest to avoid? And what was your personal biggest investment mistakes in the past?
Okay, let's start out with, my personal investment. The biggest mistake I made, I found on my first startup investment, I was sitting in a restaurant in Woodside, and then on the menu, the owner of the restaurant was raising a fund, had an investment, and so he had the name of the company. So I thought, oh, okay, I'll go see them. So I went over to see them, and I was very impressed with the owners and the products, and so I invested. And since I'm a lawyer, I can read all of my own contracts. So I got in there faster than some of the other people. And then the biggest, it really wasn't a mistake. It turned out they weren't what they said they were. There was, the numbers were a little odd, And so I have other people look at these. So when they gave the financials later on, I had a friend looked at them, and he's an expert in this area, and he said, well, there's not enough money coming down to the bottom line. And then I challenged them on that, and they didn't want to disclose any more information. And then in this particular company, they had a lot of relatives working there that I didn't think were that smart. So I convinced one of the people on the board to buy me out. So I didn't lose any money.
Oh, okay,
so I don't consider it a bad.
Not the biggest mistake.
No, I haven't lost any money on any of them.
Okay, so it's not a big problem. But what I understood, due diligence is important.
Yes, it's very important. But even there, you can miss. You can miss things.
Yeah, of course, I understand.
So
what about mistakes you would recommend to avoid for the investor who just started?
Okay, one of the biggest mistakes, one of the most irritating, because I go to a lot of pitch conferences and startups and whatever, is when people come out and they're flashing their degrees. So you don't know what they do, and they are telling you where they graduated from. Like, that's enough. And around here, if you throw a rock, you'll knock over 3 PhDs. So in this area, the fact that you went to Harvard, Yale, or whatever that's not going to be enough. But and then the other thing is the presentations are on a lot of the really scientific companies, which are the ones I invest in. They're not that clear because they the presentation will look like a PhD paper, and they don't know how to use metaphors to explain it to the investors, who typically will have a strong financial background, but they may not have the scientific background in that area. And so that's another one. And then also not timing your pitch. So they come in and they know how long they have for questions, and then they just kind of rattle on. And then they put the most important points last. Instead of, by the time they've lost everybody's attention, then they're telling you everything that you want to know. And then the financials, they will ask for money, but they don't have milestones. So they don't have a good sheet that explains what the milestones are. And then in my humble opinion, not having a woman on your founding team is a mistake, because we are living in 2020, and women investors have a lot of money and are a lot of the investors.
Okay, Marisa, thank you. And the last question, why do you think you have succeeded in this game?
Because I am relentless. I am absolutely tenacious and persistent, and I don't take no for an answer. So if I can get appointments with anybody. And so if I need to talk to somebody, I can get in to see them where other people can't. Mm-hmm. And then I have a lot of intuitive ability also, based on meeting. Like, I've probably seen over 1,000 startup pitches in person. Mm-hmm. So after a while, you get a feel.
You start to understand who will succeed and who's
right, who's going to make it and who isn't.
Okay, thank you very much, Marisa, for your openness and for your advices. And I wish good luck to you to your angel group.
All right, I appreciate it. And let me just say that Alexander's doing an amazing job with these Battle of the Startups. And he had a scientific pitch that I just saw last week, and the guy was magnificent. He had a PhD, and he explained it so that everybody understood what he was doing. So congrats, very good.
Thank you, Marisa. Right. Thank you.